Welcome to the final part of Chapter 9 from Datar and Rajan's Managerial Accounting. This is Part 5 of 5, the Linear Programming Appendix. In Part 3, we picked products by hand when one constraint was binding. When multiple constraints bind simultaneously, the product mix problem can't be solved by inspection. Linear programming, or LP, is the formal optimization technique that handles it. Quick orientation. Part 1 covered the relevance test. Part 2, opportunity cost and make or buy. Part 3, capacity constraints and customer level decisions. Part 4, equipment replacement and joint costs. Today closes the chapter with the linear programming appendix. Short, focused, useful. Recall from Part 3. Power Recreation made snowmobile engines and boat engines, with assembly machine hours as the only constraint. The right answer was to make the product with the highest contribution margin per machine hour. Easy to see by inspection. Now add a second constraint and the problem changes shape. With two or more binding constraints, you can't just compare contribution margins per unit of one resource. You need an optimization technique. That's LP. Same power recreation factory with a new wrinkle. Both engine types must now go through a testing department before shipment. Testing has only 120 hours of daily capacity. A snowmobile engine needs one testing hour. A boat engine needs half a testing hour. Plus a third constraint, material shortages cap boat engine production at 110 units per day. Now there are three constraints: assembly machine hours, testing hours, and the boat engine material limit. How many of each engine should Power Recreation produce daily to maximize operating income? 3 steps to solve any LP problem. 1. Write down the objective function, what you're maximizing or minimizing. 2. Specify the constraints as inequalities. 3. Compute the optimal solution. Let's walk through Power Recreation. Step 1. Define decision variables. Let capital S equal snowmobile engines produced per day. Let capital B equal boat engines per day. Total contribution margin equals 240 times S plus 375 times B. Fixed costs don't change with product mix, so they're irrelevant. Drop them. The objective function captures only contribution margin. Step 2. Translate each capacity into a linear inequality. Assembly. 2 machine hours per snowmobile plus 5 per boat must total no more than 600 machine hours daily. Testing. 1 testing hour per snowmobile plus half per boat, no more than 120 hours. Boat material. Boats can't exceed 110. Plus the obvious, production is non-negative. 5 inequalities total. Plot the constraints on a graph with S on one axis and B on the other. Each constraint is a straight line. The combinations of S and B that satisfy every constraint simultaneously form a polygon. Datar and Rajan call this the area of feasible solutions. The polygon has 5 corner points: 0, 0, 0, 110, 25, 110, 75, 90, and 120, 0. Linear programming theory tells us the optimum always lies at a corner point. So the search is finite no matter how many constraints exist. Trial and error approach. Compute total contribution margin at each corner point. 0, 0, 0, 0, 110, 41,250, 25, 110, 47,250, 75, 90, 51,750, 120, 0, 28,800. The maximum is at the corner 75 snowmobile engines and 90 boat engines per day. 51,750 in contribution margin. That's the optimal mix. Compare just the two best corners. At 25,110, total contribution margin is 47,250. Move to 75,90. Power Recreation adds 50 more snowmobile engines at 240 contribution margin each, 12,000 more. They give up 20 boat engines at 375 each, 7,500 lost. Net gain 4,500. The reason: switching capacity to snowmobile engines uses both the assembly and testing constraints more profitably than producing extra boat engines that already hit the material limit. Graphic approach. Draw a dashed line representing all combinations that yield the same total contribution margin, say $12,000. The line goes from S equals 50B equals 0 to S equals 0B equals 32. Now slide the dashed line outward parallel to itself. until you can't move it any further while still touching the area of feasible solutions. The point where it last touches is the optimum. In Power Recreation's case, that's 75/90, same answer as trial and error. Visually clean for two variable problems. For three or more variables, you can't draw it, so you use a computer. In real applications, LP problems have hundreds or thousands of decision variables and constraints. Trial and error and graphic approaches break down past two variables. Computers handle the optimization using the simplex method, an iterative algorithm that walks corner to corner, improving total contribution margin until no further improvement is possible. Excel's solver, Python's PuLP library, R's LP solve package, and commercial tools like Gurobi or CPLEX all use the simplex method or its variants. For an MBA, understanding the structure is more important than coding the algorithm. Sensitivity analysis. Suppose the contribution margin per snowmobile engine changes from $240 to $300, maybe because direct material cost falls. Does the optimal solution change? Rerun the trial and error. The optimum is still 75/90. What if it falls to 160? Still 75/90. The corner point is robust. The objective function gets steeper or flatter as the coefficient changes, but the corner where the optimum lies doesn't shift. There's a range of coefficient values over which the optimum stays put. Outside that range, the optimum jumps to a different corner. Sensitivity analysis maps that range, useful when input prices are uncertain. LP assumes linearity. The objective function is linear in the decision variables. The constraints are linear inequalities. When the real world isn't linear, economies of scale on the cost side, volume discounts on the revenue side, step fixed costs that jump at thresholds, lumpy capacity additions, LP is the wrong tool. There are other techniques: integer programming, mixed integer programming, nonlinear programming, but those are beyond this chapter. Translating to healthcare. Operating room scheduling. Decision variables are the number of each procedure type to schedule per day. Constraints include OR hours, anesthesia coverage, post-op ICU beds, surgical staff, specialty clinic case mix. Decision variables are the number of appointments by service line. Constraints are exam room hours, physician hours, and support staff. The objective function is contribution margin or total revenue depending on the question. MRI, scheduling, infusion suite throughput, and oncology bed allocation all map to LP. Most large hospital systems run some form of these models, often inside larger optimization platforms. The chapters define terms: decision model, relevant cost, relevant revenue, opportunity cost, incremental cost, differential cost, business function cost, insourcing, outsourcing, make or buy, product mix decision, theory of constraints, throughput margin, book value, sunk cost, joint cost, split off point, separable cost, sell or process further. And from this appendix, linear programming, objective function, constraint, area of feasible solutions, simplex method, sensitivity analysis. Pause and review any term that isn't second nature. Chapter 10 builds on this foundation. The whole of Chapter 9 distilled. 1. Managers use a 5-step decision process: identify, gather, predict, decide, evaluate. 2. For a cost or revenue to be relevant, it must be in the future and differ across alternatives. 3. The relevant cost of any decision is incremental cost plus opportunity cost, the profit forgone by not using a limited resource in its next best alternative. 4. Allocated overhead is almost always irrelevant. 5. Book value is sunk. Joint costs are irrelevant in sell or process further. Performance evaluation must align with the decision model, or managers will optimize the wrong thing. That closes Chapter 9. 5 parts, every learning objective covered, every concepts in action sidebar, every exhibit, the problem for self-study, and the linear programming appendix. Next chapter will move from decision-making frameworks to inventory costing and capacity utilization decisions. Chapter 10. Thanks for watching Mastering MHA MBA, based on Datar and Rajan's Managerial Accounting, 1st edition.